Hey everybody, welcome to my video on accounting profit versus economic profit. I'm going to motivate why economists make this distinction. I want to start by explaining that accountants and economists have different goals. In accounting, you want to ensure that laws and policies are being followed and enforced, and you want to identify wrongdoing. Accounting is a way of making sure that everything is going the way it's supposed to legally or according to regulations and policies. Economics has an entirely different focus. We want to explain and predict human decision making. Neither goal is better than the other, but they're different. And with different goals, we have to have different measures for success. And so we can look at the way we each measure costs. An accountant measures costs when it is a tangible cost where dollars actually move between accounts. There's concrete measures when money moves, and there's usually a receipt or an invoice involved. Like you can track it. The money changed hands. In economics, we use all those same costs the accountants do. We keep all those. But we're also interested in more. We're interested in foregone opportunities, the things you miss by doing what you're doing. And those foregone opportunities are really the big difference between accountants and economists. And those foregone opportunities are the source of the difference between accounting profit and economic profit. So let's talk about explicit and implicit costs. Let's put some labels on here. An explicit cost is a cost. It's a direct cost. Money actually moves. There's a receipt given. Dollars or whatever your currency changes hands. Implicit costs are your best foregone opportunity or your opportunity cost. It's the what could have been. It's money that never actually moves. It's something that could be, but didn't actually happen. And so there's no way to track it with receipts and invoices. And so, because accounting and economics come with different objectives, they have different costs. Accounting, based on its procedural or legalistic or regulatory focus, economics, focused on predicting human behavior, accounting only does explicit costs. Economics does explicit costs, and it also does implicit costs. All those foregone opportunities. Accounting costs are explicit costs. Econ costs are implicit and explicit costs. So notice that the econ cost will always be higher than the accounting cost. So what's profit? Reminder to you, profit is total revenue minus total cost. Accounting profit is total revenue minus accounting costs. That's total revenue minus explicit costs. Done. Economic profit is total revenue minus economic costs. That's total revenue minus explicit costs minus implicit costs. Economic profit is accounting profit minus implicit costs. Economic profit will always be less than accounting profit, as long as the implicit costs are not zero. And again, this doesn't mean that economists have a better measure of profit or accountants have a better measure of profit. Just remember, different objectives, and so we use different measurements. So let's do a quick example. Let's take Bob. Bob runs a small business, and Bob has $900,000 of revenue this year. It's paid $200,000 on rent, $500,000 on labor, $150,000 on supplies. His accounting profit, $900,000 minus $200,000 minus $500,000 minus $150,000. That's revenues minus explicit costs, and you get a profit of $50,000. All right, now let's add an implicit cost to the scenario. What if Bob has a job offer where he could get $90,000 as a salary? Oh, as an economist, I consider the outside option as well. And so my economic profit is my accounting profit minus my implicit cost. So take that 50 grand, subtract 90 grand from it, and I get a $40,000 loss for my economic profit. The gap between them is the 90,000 from the salary. Now, I know he isn't literally losing money, but he is giving up an extra 40 grand by staying in this market. His $90,000 salary would earn 40,000 more than all of his profit and all of his accounting profit from the firm. Should Bob stay in business? From an accounting standpoint, his firm's making money, the business is viable. From an economic standpoint, he could make 40,000 more if he took the new job. Now, I also realize that not everything is measured in dollars. Maybe Bob loves his job for non-monetary reasons, and that's fine. But as an economist, we still want to think about the fact that economically, measured in dollars, he's got better options out there. And so this is not the position that maximizes his economic well-being. But again, there's more kinds of well-being than just econ, right? Anyway, I hope this is helpful to you. It was short, but hopefully makes some sense out of all this. Econ profit is different from accounting profit. If you get zero econ profit, that means that you're doing as well in econ as in any other job you could be doing. So zero econ profit is actually not a bad place to be. But anyway, I hope it helps. Good luck, guys. Thanks for watching. Happy econing.